There are still a ton of analysts and a ton of investors that think that we are going to see a massive recession sometime towards the end of this year, and if not, early into next year. And like this article says, many economists, including Federal Open Market Committee or the FOMC members, anticipate a soft landing for the US economy in 2024, which is what it seemed like has been happening so far. That includes slowing GDP growth but no recession. However, a single misstep in Fed policy could easily slow the economy so much that it contracts into a recession, making the next several months a critical period for the central bank. Economic recessions are no reason to panic though, and have been a regular occurrence over the past century. However, investors can make the most of a difficult situation by knowing which risk factors to watch and how to position their portfolios to optimize their performance if a recession is looming towards the end of this year or early next year, which is exactly what we're going to talk about in this video. We're going to go over 5 different specific single stocks that every single one of these single stocks cut their dividend during the most recent recession. So every single one of these single stocks might be single stocks you want to stay away from. So if you want to see which 5 single stocks cut their dividends during the most recent recession and could likely do so again, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first company, the first single stock that actually cut their dividend during the most recent recession is none other than ticker symbol PFE or Pfizer stock. Now, Pfizer stock as of right now could be offering a potential buying opportunity, and this is just going off of the 5-year dividend average, going off of the forward dividend yield as of right now of 5.5%, comparing that to the average 5-year dividend yield of around 4.02%. Pfizer is cheap going off of that. And although Pfizer, as far as Simply Safe dividends go, does have a 75 out of the dividend safety score, meaning that this dividend is pretty safe and most likely is not going to cut the dividend, or at least it's going to be unlikely. If we were to look at some key metrics, during the most recent recession, we're talking about 2007 to 2009, Pfizer stock actually did cut their dividend. Recession sales were minus 6.1%, and the recession return was minus 45%. So just going off of how Pfizer stock did perform during the most recent recession, there was a dividend cut. So keep in mind, if you have Pfizer in your portfolio, and if you believe we have an up-and-coming recession that's going to take place. Another single stock, another company that did cut their dividend during the most recent recession is ticker symbol PLD or Prologis. Now, even though Prologis does have a 61 safe on the dividend safety score, meaning that this dividend is relatively safe and is offering a 3.01% forward yield, which is, by the way, even higher than what this stock has offered historically. 2.5% forward yield being the average. It's right around a 3.01% as of right now. If we were to go back all the way back to 2007 to 2009, Prologis also did cut their dividend and also saw recession sales minus 80.2% and recession return of minus 84%. So even though a lot of stocks were doing bad during this time frame, Prologis was another one, another dividend-paying, dividend growth stock that had a horrible performance and also cut their dividend. So keep this in mind if you hold this one in your portfolio as of right now. Another single stock that did cut their dividend during the most recent recession, not to mention this stock is actually in my portfolio as of right now, I'm talking about Extra Space Storage or ticker symbol EXR. Now, EXR has a very safe dividend relative to other dividend-paying stocks across the market. And on top of that, because it's offering north of a 4%, you don't really normally see dividend-paying stocks yielding above 4% that offer this safe of a dividend yield, relatively speaking. And even though Extra Space Storage is fundamentally a super high quality REIT in my opinion, in 2007 to 2009, we also saw a recession dividend cut from this single REIT. Recession sales were minus 0.6%, so above the average growth during this time frame, but recession return was minus 66%, which trailed the S&P 500, which was minus 55% during the same exact time frame. Now, of course, I have to also add this in. It goes without saying that even if every single one of these single stocks we're going through in this video cut their dividend during the most recent recession, it does not mean that they're going to do so in the future, but just going off historical performance, Extra Space Storage was another one that had their dividend cut during the most recent recession. Another single stock that actually also cut their dividend during the most recent recession is General Electric or ticker symbol GE. Now, GE is actually offering a potential buying opportunity. As you can see right now, it's offering basically double the starting dividend yield that this stock has seen historically. And even though GE does have a dividend safety score of 70, which again, across the entire market and across different competitors in the space is relatively a safe dividend, during the 2008 recession, we also saw GE, General Electric, cut their dividend and have recession sales of around minus 14.9% and a recession return, one of the worst that we've seen across the entire markets, minus 81%, and even comparing that to the S&P 500, minus 55%, that is horrible. Now, of course, I'm not assuming that you hold GE, General Electric in your portfolio as of right now. I'm not assuming that you hold any of these names, but just keep in mind, going off of historical performance, these names, like I said, did have a rough time during the most recent recession, along with a lot of different stocks, a lot of different companies. So be aware and know what you have in your portfolio. The last single stock that also cut their dividend during the most recent recession is Comerica, or ticker symbol CMA. Now, CMA is currently offering a 5.36% forward dividend yield, so it might look like a good buying opportunity. But with CMA, as of right now, Simply Safe Dividends is rating their dividend as a borderline safeties. So even before the recession is here or before it even gets bad, this stock could already be pretty risky. Now, just like the rest of them, this stock also did cut their dividend during the most recent 2008 recession, saw recession sales of minus 28.2% and recession return minus 73%, which is horrible. It just goes to show that a lot of these different companies that seem to have a lot of potential, these companies that were raising their dividends consistently before 2008, all it took was a single recession to knock these companies onto the ground. And going back historically, it took almost 10 years just to get things back to normal, to previous recession levels. So another single stock to look into, to be a little bit more wary of, because again, during the most recent recession, Comerica had a rougher time than others. So those are 5 single stocks that all cut their dividends and all had a more or less rough time during the most recent recession in 2008. Now, a few things on this: are we currently in a recession, and or are we going to see a recession towards the end of this year, and if not, early next year? Well, of course, only time will tell, and the Federal Reserve definitely has their hands full, because this is going to be an interesting one to see play out. But regardless, either way, it's just a good reminder to look throughout your portfolio and to look very closely into your holdings and ask yourself if you have any single stocks in here that might be a little bit under diversified, and maybe you want to move things around just in case we do see some troubles up ahead. Now, because the future risk of potential recession and just trying to be as diversified as possible, that's one of the main reasons moving forward I invest a majority of my cash balance into high quality diversified ETFs like SCHD, the Schwab US Dividend Equity ETF, because by placing all my eggs in one basket, it just brings upon too much risk for me personally, especially with the unknown and the volatility that I think we're going to see in the up and coming months, not to mention up and coming years. So lastly, even if you don't hold any of the stocks that we went through in today's video, even if you feel like your portfolio is going to be just fine, please look through your portfolio a few more times, look closely, and ask yourself, is every single position in your portfolio going to be okay during the next possible recession? Now, I repeat, whether or not a stock cut their dividend, raised their dividend, or left their dividend the same during a previous recession is just one piece of the puzzle. But either way, I hope this video just reminded you to look through your portfolio a little bit deeper and to just be as careful as possible when it comes to investing into stocks during this current time period, because things are about to get completely crazy and volatility is about to get out of control. Now, last but not least, I have a question for you guys, and I want to hear you guys in the comments down below. What's one popular stock that you think people are invested into heavily as of right now that you think could possibly be at risk during the up and coming possible recession that we're going to see? Leave the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.